So welcome. My name is Pat Soldano. I am president of Policy and Taxation Group and Family Enterprise USA. Joining me today is Brandon Ramon, who is an attorney with Squire Patton Boggs. Thank you all for joining us for this webinar, which will focus on the estate tax, wealth tax proposals, and other similar policies with the potential to impact family-held businesses. To begin, Brandon, will you please provide us with a refresher on the current gift, estate, and generation skipping taxes and how it exists in our tax code today?
Sure. Thanks, Pat. I appreciate it, and I'm happy to be here with everyone today to talk in more specific details on one individual tax policy that's obviously of utmost importance to the Policy and Taxation Group, and that's the estate tax and our fight for full repeal. So for context, if everybody will recall, during the 2017 tax reform push and Tax Cuts and Jobs Act, there was a provision in the House passed bill that would have fully repealed the estate tax. But for additional context, and as we talked about in our previous webinar on individual tax policies, there was a procedure that was used to pass tax reform in the Senate called budget reconciliation. So budget reconciliation requires a majority plus one vote, so 51 senators, to vote for the bill in order to pass it. That also puts on certain restrictions in terms of the amount that the bill can cost and other policy restrictions that are part of what's called the Byrd Rule, which governs the ability of the Senate to pass this bill with that lower threshold. Because there were some policy concerns about repealing the estate tax and the potential viewpoint that could put on the Republican Party, as well as the cost of full repeal, the ultimate compromise was actually on the Senate side, instead of pushing forward with full repeal, was to double the estate tax exemption. So in 2017, it was a $5.5 million exemption per individual, or $11 million per couple. In 2019, that exemption was $11.4 million per individual, or $22.8 million per couple. That, as you know, has been discussed in previous iterations. The estate tax is indexed to inflation, and so every year that exemption increases a little bit. The exemption increase as part of the individual tax policies will expire at the end of 2025, and so we are now in a position where if there's not action done, it can revert back to pre-tax reform levels, so those that were in place in 2017.
So thank you, Brandon. That's helpful context for what I would like you to now address, and that is, as we know, Republicans and Democrats have vastly different perspectives on the estate tax. So could you please compare President Trump's proposals or his approach to the estate tax with the approach of Vice President Biden?
Absolutely, and this is a fairly straightforward position. So I will say, in terms of messaging, the president may need to work on how he portrays what actually happened in tax reform versus what actually happened in tax reform, because the president does support full repeal of the estate tax, but as I just discussed, that's not actually what happened. The doubling of the exemption is what actually occurred. But the president does support full repeal of the estate tax. Though his position generally on tax reform is to make it permanent, we do know, again, he supports full repeal. In terms of the wealth tax, the president has never really talked about this, but we know that he opposes proposals to implement a wealth tax because that is vastly not in line with the proposals for what the Republicans perceive as to be pro-growth. So for both the estate tax, they support a full repeal in the Trump administration and then oppose the imposition of a wealth tax. I would say that is then almost, in some ways, a little bit reverse from the Biden campaign, because the Biden campaign has proposed to decrease the estate tax exemption to pre-tax cuts and Jobs Act levels. So again, $5.5 million per individual from the current $11.4 million exemption. They also oppose full repeal, obviously, because they want to see it in place with the decreased exemptions. In terms of the wealth tax, this is an interesting proposal because neither Vice President Biden nor Senator Harris, who's running as his vice presidential running mate, have actually supported wealth tax proposals. But I will say that is something that the progressive wing of the party has begun to talk about and has made an effort to continue to push within the party. you'll note that, for example, Bernie Sanders, who was the leading contender opposing Vice President Biden for the Democratic nomination, had proposed a wealth tax beginning at 1% of wealth, at wealth over $32 million, going up to 8% of wealth for those who I believe had, I can't remember the total number, but it was a significant number, a significant level of income. But again, it would be something that would be very, very progressive in one sense, and raise lots of revenue, but would go obviously in a way that I think many of our supporters would like to see tax policy not go. So I don't think that we would likely see a wealth tax implemented under the Biden administration, but again, we'll see growing calls for this and a potential leaning towards that from a larger portion of the Democratic caucus.
Okay, well, again, that's helpful. But outside of the estate tax and wealth tax proposals, are there any other similar issues that our supporters should be aware of as we head into this 117th Congress?
Yeah, that's helpful. There's two particular things that I want to highlight. And so the first deals with the estate tax rate reduction bill that Policy and Taxation Group has been pursuing. For context, I mentioned the way that the doubling of the exemption came about. And so that was as a fallback to the full repeal of the estate tax. And it was something that kind of gained hold towards the end of the negotiations, and they were looking for a compromise. Our legislation has support from right now only Republicans, but we have several targeted Democrats that we're hoping to get to be supportive this year. And so we see this as a potential way to push back against calls to reduce the exemption and pursue a compromise. I'd say, when we look at some of the meetings we've had with some of the more moderate Democrats over the years, you see a lot of people who may have an issue with fully eliminating the tax, but have appeared to largely be more receptive to the rate reduction issue, both from a fairness perspective and just general good policy. Because if we think about it, there's frankly no reason for the 40% rate. It's just, there's not tied to anything, whereas reducing the rate to that of capital gains has a lot more sense, and you can kind of put a finger on what the reasoning is for it. So it's something that we'll hopefully continue to push next year as a good talking point in opposing, again, efforts to increase the estate tax or reduce the exemption levels, and put this out there as an alternative to potentially use as a compromising with our Democratic friends. And then the second piece is one that obviously I know many are familiar with, and that's the Section 2704 valuation discount issue. As you'll recall, in 2016, the Obama administration had proposed regulations on valuation discounts regarding addressing the valuation of interests in corporations and partnerships for estate, gift, and generation skipping tax purposes, and then also the treatment of lapsing rights and restrictions on the liquidation and determining the value of assets that are transferred. The IRS put those regulations out in 2016, but by the time before they were able to be finalized in 2017, once the Trump administration had, had taken over, the IRS, pursuant to an executive order from President Trump requiring various agencies to review their regulatory framework, decided to pull back and withdraw the proposal and never actually finalized these regulations. I'd say that, again, we need to be cautious always and be cognizant, because obviously Vice President Biden, if he is president, was part of the Obama administration, which did put forward these regulations. And they view it as a way to kind of enforce the state tax, estate gift and generation skipping tax laws and requirements. And so we something to keep an eye on, not necessarily something that has risen to the top as a potential priority, but I'd suggest it's just, again, something to keep an eye on as we go forward. So those are two of the key issues that I would suggest that we keep an eye on, in addition to, obviously, as relates to the estate tax, the stepped up basis issue, and whether we do end up getting rid of the stepped up basis.
Well, thank you, Brandon, for that very helpful information and a very important update, and for joining us on this webinar today. And thank you to all of you who participated in the webinar or viewing it after the fact, and for your continued support of our work. Thanks again.